Hey everyone, welcome back to Corporate Decoder, the place where we peel back the corporate curtain and see what is really going on behind those shiny press releases. Today we are diving into Aptorum Group Limited's latest filing, and let's just say it involves some interesting financial statements and agreements that could change the game for them. So, Aptorum Group Limited, a company we have talked about before, has released some important financial information for the first half of 2025. This is their big annual report, but a more frequent update called a 6-month interim consolidated financial statement. Think of it as a mid-year checkup for the company S Money Matters. They are doing this to keep their registration statements up to date. This is important for them because it allows them to potentially raise more money or offer shares in the future. Now, let S get to the juicy part, the financials themselves. We are looking at their unaudited interim condensed consolidated financial statements for the 6 months ended the 30th of June 2025. This means we get a snapshot of their financial health up to the middle of 2025, and we can compare it to the same period in 2024. This is where we can really see if the company is growing, shrinking, or staying put. They also provided a breakdown of their operating and financial review, which gives us some context for these numbers. We will touch on that as we go. In this section, Aptorum typically explains what happened during the period. They will talk about their business activities, revenue changes, expenses, and their future outlook. This is where they try to paint a picture of their performance and what lies ahead. We will look for any significant trends or statements that could impact the company's future. One of the most significant things mentioned in this report is the merger agreement. Aptorum entered into a merger agreement with a company called Diamir on the 14th of July 2025. This is a really big deal. Mergers are strategic moves that can drastically alter a company's direction, market position, and overall value. It means Aptorum is likely looking to combine forces with Diamir either to expand its operations, acquire new technology, or enter new markets. The fact that this is incorporated by reference means we have seen this before in a previous filing, but its inclusion here in the context of their financial updates is a reminder of this major corporate event. Following on from the merger, there is also a management services agreement between Aptorum Therapeutics and Diamir. This suggests that even before or during the merger process, there were plans for how the management of these companies would work together or provide services to each other. This detail clarifies how operational aspects will be handled, which is crucial for the smooth integration after a merger. Then we see an intellectual property license agreement. This is a big clue about what Diamir brings to the table. Licensing intellectual property or IP means one company is giving another company permission to use its patents, trademarks, or technologies. This is often a key part of mergers where a company is acquiring valuable research or unique product designs. This agreement is a significant indicator of the strategic value Diamir holds for Aptorum. We also have a voting and support agreement involving Aptorum and its major shareholder. This means that a significant shareholder has agreed to vote their shares in a particular way, likely in favor of the merger agreement. This is crucial for getting shareholder approval for such a significant transaction. It shows that key stakeholders are on board with the proposed merger. Finally, there is a form of stockholders agreement. This type of agreement typically outlines the rights and obligations of shareholders, especially after a major event like a merger. It can cover things like how shares can be bought and sold, board representation, and other governance matters. It's about establishing the future governance structure and shareholder relationships. Overall, these exhibits paint a clear picture. Aptorum Group is undergoing a significant transformation through a merger with Diamir, and these agreements are the foundational pieces being put in place. The financial statements then serve as the scoreboard for how the company is doing amidst these strategic moves. Now, coming back to the financial statements themselves without seeing specific numbers here, we generally look for revenue growth, profitability, cash flow, and debt levels. For Aptorum, given these strategic moves, we would really want to understand how the financial performance in the first half of 2025 stacks up against the previous year. Are revenues increasing? Are costs under control? Is the company burning through cash too quickly, or is it generating it? The operating and financial review and prospects section would often give us the narrative behind these numbers. For instance, we would be looking for details on revenue streams. Are they diversified, or are they reliant on a single product or service? What is the gross profit margin, which tells us how efficient they are at producing their goods or services? Then we would look at operating expenses like marketing, research and development, and administrative costs to see if they are managing them wisely. The net income or loss is the bottom line. Is the company profitable, or is it losing money? If it is losing money, which is not uncommon for companies in growth or R&D phases, we would want to know if the losses are increasing or decreasing, and if the company has enough cash to sustain these losses for a reasonable period. Cash flow is vital. Positive cash flow from operations means the business itself is generating cash. Considering the merger with Diamir, a large part of the financial analysis would be understanding how Diamir's financials would integrate, and what Diamir brings in terms of assets, liabilities, revenue potential, and technology. The licensing agreements suggest significant IP value, which could be a major asset. Looking at the broader context of Aptorum and the biotech or pharmaceutical industry can be helpful. Companies in this sector often have long development cycles, high R&D costs, and significant regulatory hurdles. Their financial performance often reflects these long-term investments. A merger in this space could be aimed at consolidating resources, accelerating drug development, or gaining access to new therapeutic areas. The success of such a merger hinges on effective integration and the future commercialization of products or technologies. In our opinion, Aptorum Group's focus on a merger with Diamir, along with the related agreements, indicates a significant strategic shift. The success of this venture will heavily depend on the successful integration of Diamir's assets and intellectual property, and Aptorum's ability to translate these into commercial success. The financial performance leading up to and following this merger will be a key indicator of whether this strategic move is paying off. We will be watching closely to see how these financial statements evolve, and what the operating review reveals about the combined entity's prospects. Alright, that is our breakdown of Aptorum Group Limited's latest filing. What is your take on these merger plans and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.